Hey guys, I make a lot of money from trading 112s every single month, and I've been trading them for a while. So I put everything I know inside one document. And so again, I'm going to walk you through everything in this document so that you know how to trade 112s, whether you're currently trading them or you're looking to trade them. I bet this will be a super useful video. So let's dive into it because again, I go over everything like entries, hedges, best markets, worst markets, and so many other things. Again, if you want this PDF for free, I am giving it to anybody who wants it. Just click the link down below and you'll get free access to this and my trading Discord and everything like that all for free. Just put in your email and you'll get this handbook and the Discord and even a masterclass on 112 trading that I haven't released publicly. Anyways, let's dive in. So the 112 trading handbook here goes over first off the pros and cons. So again, let's talk about when does this strategy work best? It works best for bull markets, for sideways markets. And so again, if you're trying to capitalize on an upward movement or sideways action, this is the ideal strategy. Now again, if the market's dropping, you can still make money, but in the short term, you're going to see net losses until time decay factors in. So this is best on bull markets and sideways markets. Next, this strategy works best for people who want slow, consistent profits. You're not going to hit home runs, 1,000% returns, and it's not going to be fast, but it's going to be slow and consistent, and you're going to have a 99% win rate. So it's literally going to be amazing. As for someone who understands that passive income and boring money is typically the best money, and it's also for someone who likes the ability to turn their trades into hedges to further protect their downside. Now, what are some cons? Well, if the market were to pull back hard or crash, you could lose thousands if you're not properly hedged. Also, you may not always see the profit that comes from a bear trap. So if we're looking at the 112 trade, you make more money in this what's called bear trap zone. And so you may not always do that because you're going to hit your stop loss before you let the bear trap zone play out. You only see this profit at expiration, and that's a big issue as well. Now again, in order to trade this, you need full margin approval on your trading account, you need futures trading approval, and you need at least $8,000 for ES or $800 for MES. Now again, it's ideal to be trading with no more than 50% of your account, so you typically need $16,000 for ES to place one trade, or you need $1,600 on MES to place one of those trades. Next, this trade is constructed using a put debit spread and two short puts. So again, you can kind of see this here. The put debit spread is structured at a 25-23 delta, and the two short puts are 7 deltas. Next, you manage a 112 with a stop loss between 200 and 400%. This is going to be based on the initial credit received to enter the trade. Again, I like 200, but 300 and 400 work as well. Again, the further you push your stop loss, the higher your win rate will be because the less likely it is for those stop losses to get triggered and you let the trade play out. So a 200% stop loss does cap your losses more, but it will have a lower win rate. And so that's kind of how you play it. Next is take profit. It's typically anywhere from 80% to 95%. Again, this really depends on what hedge you want to turn that trade into because some hedges cost more, so you want to make sure that you're collecting more money before you put that hedge on. And so again, I like 80% if I'm just closing trades. If I'm turning them into hedges, I like it to be more around 90%. Now again, you can turn a 112 hedge, you can close it in a few ways. You can either close the entire position, you can turn it into a put debit spread or a ratio spread, or you can just have a long put hedge. Now the best practice for a 112 is this structure. Again, it's a put debit spread structure, and then you two short puts that add 7 delta. You do a 90 DTE range, and then again you have a 300% stop loss and 80% take profit. And then again, you want to turn it into hedges. You want to have at least one ratio hedge, and then the rest you want to turn into put debit spread hedges. Again, you can automate the entire 112 strategy by setting it up once and having it enter, exit, hedge, and all that for you automatically by using the options auto trader, which is linked below. But again, in depth, if you want to read more in depth about the 112, about entries, about exits, about hedges, again, make sure to click the link down below to grab this free PDF. But I do want to quickly discuss the 6 biggest mistakes for 112 traders. That's not hedging properly. Make sure you have enough hedges to protect your account risk, which is where all your trades, if they were to hit their stop loss, how much would you lose? You want to make sure that your hedges cover it. Also, guys, the 112 strategy is boring, but it works. So don't try other strategies, specifically zero DTE, because you want some activity. You're going to end up losing money there, and then the 112 will be pointless because all the profits from there will be paying out the losers you had on these other strategies. So just stick with it. Next is over leveraging. Make sure you do not over leverage your account. You need to have at least 50% of your account in trades and no more to help prevent this over leveraging issue. Next, make sure you understand where the market is at, because again, the higher the market is, the greater of a risk for your 112 turning against you and having those losses. Also, make sure you're managing it correctly with stop losses and take profits, and you're doing that every hopefully multiple times a day, and no emotional trading. Also, make sure when you're trading small accounts, you do it with MES instead of ES. And so again, there's so much more that can be covered here in the ideal trade structure of what I do every time. But again, guys, if you want this PDF, I just wanted to quickly walk through it. But I typically do more in-depth videos that are to the point. But if this is my first video, welcome. This is not normal. But I did want to make sure that you guys were all aware of this free handbook, because again, it has everything I know about 112s. So if you're looking to trade them for the first time or have traded them before but want to make sure you're following the best practices, this is the document for you, and you can get it for free by clicking the link down below. All right, guys, see you in the next video.